To me, that's the financial crisis. That's kind of symbolizes the financial crisis of 2026 that could be developing here.
And the inflation genie will never really be put back in the bottle. Now, that part is actually consistent with what Mark said.
What is this financial crisis of 2026? What's going to happen to inflation, economic growth, and the stock market? What's going to happen to the gold and silver price after they've just exploded to unprecedented all-time highs? What's going to happen to monetary policy in the US and around the world? And which sectors are likely going to outperform and survive this financial crisis? We're going to find out with our two esteemed guests of the panel that we're hosting today, Mark Skousen and Steve Hanke. Mark Skousen is the founder and editor of the Skousen Report, and Steve Hanke is the professor of applied economics at Johns Hopkins University. This video is sponsored by Kalshi. It is a fully regulated platform that lets you trade on real-world events, from economic data to political outcomes. Sign up and use my code LIN, L-I-N, in the description down below, or scan the QR code here. And new users will get $10 when you deposit $100. Traders can put money down on their favorite teams, events, elections, and more in all 50 states, including California and Texas, and over 140 countries. More on that later. I'm pleased to be welcoming our two esteemed guests now. Mark and Steve, welcome to the show. Good to host you both.
Thank you for having us.
Pleasure.
Let me play for both of you this clip of Howard Lutnick at Davos last week, talking about his outlook on economic growth. We'll start there. Take a listen, and we'll react together.
I think we're going to grow more than 5% GDP this quarter, and that's for the $30 trillion U.S. economy. And if rates were lower, you would see us hit 6%. What is holding us back is ourselves, okay? We are going to align our economy and our industrial policy with growth and success, and we hope to export that. But we were exporting the power of our economy to the rest of the world. In 1 year of change, I just said my expectation is GDP of the United States of America is over 5% in the first quarter of 2026. That's just my opinion, but so far in the first quarter, you saw what I said. I thought the United States would grow 4%, and the whole world said, you got to be kidding me. 4.3% in the third quarter. You're going to see plus 5% from the United States of America, the $30 trillion economy, winning. And that.
I'll just stop here. Professor Skousen, I want to start with you. You track your own estimate or measure of growth. It's called gross output. Output for the economy, different from GDP. But can you just comment on the Secretary of Commerce, Lutnick's remarks that you just heard just now?
Yeah. First of all, let me just mention that for the last 45 years, I've been writing forecasts and strategies, and I am actually changing publishers when this will come out. I'm now moving over to the Oxford Club, and this has been an emotional change in my life after 45 years of writing F&S. But the Oxford Club made me an offer that I couldn't refuse, and even have a signing bonus. And I'm tripling my subscriber base as a result of moving. So I'm now the editor of the Skousen Report, subtitled Central Intelligence from America's Economist. And I would say I think we've all been kind of surprised by the GDP data. I think we've been pretty accurate on inflation coming down because the tight money policy has worked in reducing inflation. We thought we might see a recession, and as a matter of fact, we did see slowing down of the economy. If you use my statistic, gross output. Gross output is the top line in national income accounting. It's often ignored by government officials, unfortunately, although the BEA does publish every quarter a gross output. And what's interesting is that you're still seeing slow growth in inflation, not quite stagflation, because we are seeing some growth in business activity. But it's only consumer spending that is driving the GDP statistic higher. And of course, it leaves out the supply chain. And the supply chain has been flat for the last year. It really hasn't grown at all in real terms. In nominal terms, yes, but in real terms, it hasn't. So I'm more cautious than government officials on this area. And I do think that we have to recognize the job market. GO is much more consistent with this stagnating job market. We can't ignore the fact that new job creation is really flat and that Trump's trade war is still wreaking havoc in the supply chain and in the business sector. So those are cautionary tales. I'm still very bullish on the stock market. I'm 100% invested in the markets. And I think gold and silver have way outperformed what I was expecting. So there's been a lot of surprises that have gone on so far.
I'll come back to the gross output calculation in just a minute. Professor Hanke, I'll give you a chance to respond to Howard Lutnick's comments first, and then also to Professor Skousen's remarks.
Well, I think Lutnick is on the delusional side of the spectrum. The potential growth rate in the United States is long term around 2.5% per year or something like that. So he's talking about doubling that. So it does fluctuate around the potential. Sometimes it's a little higher, sometimes a little lower, but 5 to 6% is I think getting way out ahead of anyone's skis. That's a political statement, not really an analytical statement. So I'm more with Skousen in terms of my sense of things. Mark elaborated, and I think one thing that's important to talk about, and we should elaborate on it because Mark has been the big proponent of gross output. And let me just say, well, what is gross output? Well, as Lutnick said, we've got about a $30 trillion economy, actually $31 trillion economy. That's GDP. That's the value of final goods and services sold in the economy. And that's what's in every textbook. Everybody looks at it all the time, spends all their time looking at it. But gross output is actually 51 trillion. It's about 65% higher than GDP. Now, why is that? What is gross output? Gross output is looking at all the transactions in the economy that are required before you can get to something called the value of final goods and services sold in the economy, or GDP. So it's in kind of modern lingo, what we're talking about in the modern, it's everything in the supply chain, starting from, when you produce a bushel of corn, well, where does the corn go? How is it processed? There's a transaction, an initial one, and then there's another one, and another one, and another one, and another one, and then eventually you get cornflakes or ethanol or something, out of the thing. So what Mark has been advocating, and I've been supporting Mark in this and writing about it also, but Mark has been literally lobbying for the Bureau of Economic Analysis to include this in their reporting, and now they do, actually. So this is a very important thing because you get a handle on what's going on under the hood, what's happening in the economy under the hood, and this comes from something that Mark and I are both members of the Austrian School of Economics, that way of thinking about economics. And why did Mark get into gross output? I actually have thought about this quite a bit, Mark. And that's because he wrote a book, a theoretical book, taking off and kind of modernizing some of the things that Friedrich von Hayek had written. And it's called The Structure of Production. And that structure of production leads, that's everything in between the start and the finish of producing something. So that's the structure of production. So it's a very theoretical thing. It's in Austrian economics. most other economists don't understand it. They don't even know it exists. But Mark wrote this path-breaking book on that. And then the logical thing is, well, how do you measure this? Does anyone actually measure it? And then you get into gross output. And that's important, as I say, because it gives you some idea of a leading indicator of what's coming down the pike, kind of.
Okay.
And what's going on before we actually get to GDP. So, Mark, what do you have for a measurement on that now? What is that looking like relative to GDP? Lutnick gave us the last quarter report, 4.3% growth in GDP. Well, what's going on with Go?
Well, Go is in real terms is actually growing at a slower rate because the supply chain is not moving much at all. So it's less than 3% in real terms. It did go up like GDP, but anytime gross output or GDP is growing faster than gross output, that means business is slowing down. And in fact, in real terms, it actually declined again in the third term. It's been declining for about a year in real terms. GO has, or not GO, but B2B business spending. And while consumer spending is the only thing that's keeping the economy going. And you wonder, how long can this disconnect last? At some point, either business spending has to start catching up to consumer spending, which it hasn't done so far. Again, we have these lags. We only have third quarter GDP and GO, or consumer spending has to peter out and start moving back down equal to business spending. And the jury is really out on that. And of course, both of us were expecting a recession as a result of the tight money policy the Fed had. And it shows you the resilience of our U.S. economy, that despite Trump's tariffs and the supply chain disruptions and so forth, it seems like there's a lot of money still being spent out there. And I think a lot of it is due to the technological advances of AI. And that's why I think we're entering this era of, I have a sense of optimism as well that this could last for some time. You mentioned the Fed is engaged in easy money. Well, okay, they've cut interest rates a few times, but the money supply really hasn't grown very much. I know you're an advocate of quantity theory, and so am I, but it's not growing like it used to. It's growing at a fairly slow rate, suggesting to me that we're probably going to be in this period of slow growth and stubborn inflation. That's how I describe it: slow growth and stubborn inflation. And I would also add that more importantly, we're going to struggle with the economy for a while, with the uncertainty of these tariffs and what's happening in terms of economic growth. I have some optimism about the technological advance that I think is covering a multitude of sins, if you will. And I also think that things like the Trump accounts, which apparently they're predicting 25 million Americans will invest $1,000 each in the stock market, in the S&P 500. That could push this bubble that you talk about to a higher and higher level.
Okay, just on that note, Professor Hanke, can you respond to Mark's comments on M2 money supply growth, 4.2% now, 4.3%, 4.6 now. That's the latest reading.
Let me comment on a couple of things. I'll get to the money supply. I'll just do these in sequence, kind of. But so the consumption, and one reason that I think we were a little bit off on our anticipation of a slowdown in the economy and a recession was the wealth effect, this K-shaped economy kind of thing. After the COVID hit and they goosed the money supply, of course, asset prices exploded. And we ended up with the economy, of course, accelerated, and inflation ultimately came into the picture with a lag. But the asset price thing and a wealth effect thing are tremendous, and it's something that I don't think we anticipated. Now I think I understand it. At the time, I really didn't think it was that important. But you've got the top 20% of earners account for 60% of all the consumption in the U.S. economy. And when we look at GDP, about 2/3 of the GDP is final consumption. So that's what's driving consumption. It's this K-shaped economy. The rich have gotten very rich and have a hell of a lot of money to spend, and they're spending it and driving consumption. The little guy has been screwed because inflation has eaten away at his real income. Inflation's gone up faster than his wages, and that's why Trump's ratings on the economy are so low. You have a lot of people out there who have these so-called affordability problems because the income increases that they've had, they've gone up more slowly than inflation. So you've got this kind of duality in the economy. They call it a K-shape, the upward trajectory on the rich, and then the downward on the ones that are below the median kind of thing. So that's one thing. I think the wealth effect is in fact important. And if Mark's right about the stock market, that will keep fueling consumption because of the wealth effect. The wealthy people will keep spending money, and they're the ones that count. The little guy doesn't amount to that much in terms of aggregate consumption. So that's one factor. Now the money supply thing, I think a little bit maybe different view than Mark does. The rate of growth year over year in the money supply is still below Hanke's golden growth rate of 6% a year, a rate consistent with hitting a 2% inflation target. But it's accelerating. It's going up. And where is it going? It's going to keep going up. Now, yesterday, the Fed did not change the Fed funds rate, but they have been going down. And I think they'll go down probably the next meeting. They'll take it down another 25 basis points. That's kind of a minor thing. The major thing is that the Fed has switched in December from quantitative tightening, where they were reducing their impact on the money supply, reducing the size of the balance sheet, to what? They promised, and they have bought $40 billion worth of T-bills, with treasury bills. They're monetizing the deficit, just like they were monetizing the deficit after the COVID hit. Then they monetized 90% of all the deficit. The money supply exploded. Asset prices exploded. Real economy went up. Inflation went up. And now they're back in the quantitative easing mode again. So that happened in December. Now, what's going to happen in April is even more significant, because about 80% of broad money measured by M2 is generated privately by commercial banks, not the Fed. The elephant in the room are commercial banks, and they actually are growing their loan books at a rate that exceeds 6% right now on an annualized basis. And I think in April, the supplemental liquidity ratio it will come off, and they will have many more reserves, a lot more ammunition, and they will accelerate their loan growth. That might go up to maybe 10% or something like that. So what does this mean? This means that the money supply is loosening. It's accelerating. I think it will continue to accelerate, and the inflation genie will never really be put back in the bottle. Now, that part is actually consistent with what Mark said. Mark said we'll probably have a slow economy and continue having this inflation problem. And that scenario, I kind of agree with. The economy is not going to be as hot as everybody thinks, and the inflation will be the Achilles heel of Trump, because the inflation has been more or less flatlined. The CPI is 2.7%. It's been flatlined for about 6 months, 9 months, and I think it will probably. I think it will probably go up, not down.
Okay, Professor, before we move on, I just want to show both of you this one statistic here. According to prediction markets, this one's from Cauchy, government shutdown on Saturday. Traders are placing a 75% chance of a government shutdown on Saturday. As you know, the Senate is Democrats are blocking a funding bill over the recent ICE shootings in Minnesota. But regardless, let's suppose we have a government shutdown this weekend. This will be the second one in a matter of months. Would that have any impact on your gross output or even GDP outlook? I'll start with, go ahead.
Let me just say, we do have an election coming up. This is going to be another negative on Trump. This time, the last government shutdown, in terms of blame, the blame game, it was kind of even between Republicans and Democrats. Everybody was pretty fed up with the whole thing and the whole bunch of Congress. This time, I think the blame will end up residing on the Republican side and be bad news for Trump. I mean, basically, it was generated by Minneapolis, and the problems in Minneapolis, although I think it's a complicated thing. I mean, one reason they have a problem, and one reason the local authorities don't coordinate and collaborate with the federal authorities, is that Minneapolis is a sanctuary city. They never talk about this, by the way. I don't know why the Republicans don't just say, look, it's a sanctuary city. They're not cooperating. They're not allowing for the proper enforcement of federal laws and so forth. And so the whole thing is just spun completely out of control. And I think with these two shootings, I think the Republicans are going to take the blame for it.
All right.
So I think it's very negative.
Mark, let's pass it over to Mark. What do you think about this looming shutdown? How would it impact growth? How would it impact employment?
Have never really impacted economic growth overall, because it's a short-term phenomenon. I think this time it'll be a short-term phenomenon as well. The stock market never seems to be bothered much by it. I do think that ICE created the Trump administration, shot themselves in the foot, and primarily because ICE isn't just going after the criminal element and deporting them. They're also 44% of all arrests are on illegal immigrants who have no criminal record whatsoever. So this is what really caused it. Is this extremism on behalf of the immigration authorities and ICE going after everybody and anybody and breaking up families and stuff like that. It was really a stupid move on the part of Trump, kind of like his tariff policies and so forth. And he's made a number of mistakes, but nevertheless, the net benefit, I mean, you have the deregulation environment, you got a tax cut going on. You have these Trump accounts for 25 million Americans that, that's all pretty positive. So I do think that we can kind of ignore the shutdown type of situation. I do think the midterms are favoring the Democrats taking over government again, at least in the House, maybe even in the Senate. So that will stifle Trump's ability to make any changes, and then he'll be forced to just do executive orders, which he's been largely doing anyway. So I have mixed feelings about all the things that are going on, but on net balance, it still seems to favor a slightly higher economic growth rate in terms of GDP, not GO, but GDP. Consumer spending still seems to be extremely positive. And when that turns, then we're going to have a problem. I should mention historically, Trump is always saying this is the greatest recovery, this is the greatest economy ever. Well, in 1983, in Reagan's third year, real GDP went up 8%. So that shows you how a real economic recovery can be pretty impressive.
Well, what's your view on what could happen during the midterm elections? I'll start with Professor Hanke first, and whether or not that's going to have any impact on fiscal spending and trade policies going forward.
Well, I think I happen to be a divided government person.
Okay.
The performance of the government, and I've analyzed this very carefully and written about it. The performance of the government's always better when it's divided. When the Congress is in one party and the White House is in another party, everything works much better. And of course, the classic one recently, in terms of fiscal control and everything, was when you had Newt Gingrich was the Speaker of the House and Bill Clinton was the president. That was a great divided government because you had two intelligent people dueling it out. And what happened? Remember the last 2 years of Clinton. Of course, he was a big beneficiary of the peace dividend when the Soviet Union collapsed. Now we're going into a war cost. We're ramping up. Trump wants to increase. This shows you how bad things are. He wants to increase the Defense Department budget from 1 trillion to 1.5 trillion. Now that's the home of waste, fraud, and abuse is the Department of Defense, the biggest department we have in the government. So this is a complete train wreck coming. And there's another one coming on the shorter term basis, and that is what? We've got an armada going in to start a war with Iran. And Iran indicates that this time around, it's not going to be a 12-day war. They're going to fire back heavy duty, which means that the Gulf, the Strait of Hormuz will definitely be closed. And you can see that oil is up, WTI is up over $2 a barrel. Yeah. It's up over $65 a barrel right now, and it's been below 60 for quite some time. So I think we have a lot of things going on that are kind of like Minneapolis. Mark says shooting yourself in the foot.
Professor Skousen, let me just get your outlook on.
By the way, let me. I didn't mention that the last 2 years of Clinton's administration, we actually had where Clinton was running a surplus. Remember, the big scare then was the bond market was saying, God, they're not going to be any more bonds. There's not going to be a bond market. So anyway, I'm a divided government person. So I think if the government is divided, things will improve in Washington, D.C.
Professor Skousen, are you concerned about the recent activities in the Middle East, the armada that Professor Hanke was talking about heading towards Iran, tensions escalating over Iran, and also the fear of Europeans and perhaps other countries dumping U.S. treasuries and other U.S. assets over the threat of Greenland annexation? But I think that's in the past. Anyway, are you concerned about the selling of U.S. assets and, generally speaking, as an investor or somebody looking at investment strategies, do recent geopolitical activities, especially in Iran, alter your forecasts?
Yeah, I see both Trump emphasizing Fortress America, but I also see him as an aggressive promoter of trying to be the peacemaker around the world, and he's using it aggressively, going toward he changed the name from Defense Department to the War Department. That kind of indicates where his mind is. Look what he did in Venezuela. He removed Maduro, which I supported, but he left the Maduro government in Venezuela. And I still think that's going to be a real quagmire. There's been quite a bit of studies on how Venezuela is very corrupt, and the gangs, the drug gangs and so forth, in support with the generals and so forth. That's going to be very difficult. And Iran would be even more difficult to try to manage that situation. But Trump has such a massive ego that he thinks, we can intervene in Iran, we can intervene in the Ukraine, we can intervene in the Middle East. He's full throttle ahead, and the military loves it. Of course, the military loves all these new techniques, these new technologies, and they're using them. They're delighted that they can try out all of these new ways to, and they're basing it on that very big success in Venezuela. So the president is flexing his muscle, is the way I look at it, and he's hoping that these countries will back down. I do think that you mentioned also the dollar situation. The Japanese carry trade is a major issue. We all know that financial crises arise with relatively small events that suddenly explode and make the front page of the newspapers. And the Japanese carry trade could be one of those, because Japan has this huge debt. They have a huge position in U.S. treasuries, as does China. China is reducing its purchase of government securities, and they're buying gold right and left. Central banks are buying gold left and right. Silver. I like to point out that the silver dollar right here, the silver dollar, the American Eagle silver dollar now costs a Benjamin in order to buy what is legal tender, a silver dollar that was worth $1. It was in our pockets in the 1960s. And now you have to pay $100 for a silver dollar. To me, that's the financial crisis. That's kind of symbolizes the financial crisis of 2026 that could be developing here.
Yes, Professor Hanke, go ahead.
Well, on the defense thing, I'm two things. I think the jury's totally out on Venezuela. I don't know how you could say that we've had success in Venezuela. We haven't really done anything. And we will just wait and see how that all turns out. Usually, our interventions, by the way, we have a long history of attempts at regime change, and those have almost all ended in total disaster. And the thing I'd like to ask Mark is, what Austrian economists, what would Ludwig von Mises say about what you just said? I think he'd be all over your case about leaning into the defense thing. I mean, I know of no Austrian economist who's been a man of war. They're men of peace and cooperation and trade and so forth.
Well, no, Steve, I think you misunderstood what I said. I said that the Trump administration and the military, Marco Rubio and Hessek, these people, they all see this as an incredible success story in terms of a military operation. And they are flexing their muscle right now. Now, they've left behind what is appeared to be a disaster, because the Maduro regime and the generals, they're all still in power. So I am not optimistic that they're going to be able to solve this problem, but I am saying they feel like they're the cat's pajamas now. They are flexing their muscle, and they may become more aggressive in Iran and in Venezuela and other places.
Mark, we know that. The question is, what does Skousen think about this? They think it's great. Look at Lutnick when he's talking about the growth in the economy. He gives a vision. Our vision of the growth rate in the economy is not consistent with his. So my question is, well, what about all this international interventionism and attempts at regime change? Because that's what it is. Call it what it is. It is regime change. And if you look at Lindsay O'Rourke's book that was published on regime changes by the Cornell University Press about 3 or 4 years ago, she goes through all of these things. I mean, there have been over 100 of them these covert operations that the U.S. is involved in, and virtually all of them have been a complete disaster.
Well, there are some exceptions, and of course, Chile is an exception. Pinochet and the Chicago Boys have ultimately altered the cultural and economic changes. It took a long time to happen, but Chile is on its way. Now, just recently elected a free market conservative president. Again, they've gone through different phases of socialism. I'm very optimistic about Malay. I actually think Latin America could be transformational here if indeed Venezuela could, the Chilean model could be adopted. Now it's got to be, they've got to be support internally, and that's the real question mark. I mean, I lived in Venezuela for a year. I was there when it was one of the freest, wealthiest countries in the world in the late '60s, and of course it collapsed gradually and then suddenly, as they say, mainly because Venezuela nationalized its oil. So if they denationalize the oil, it's a tall order. I certainly agree with you, Steve. It's a tall order, but I am optimistic that possibly we could see the Chilean model being adopted throughout Latin America. And we shouldn't just sit back and say, well, let's hope it happens. I think we should encourage it.
Oh, I'm all for encouraging the thing. But let me remind you, I was President Rafael Caldera's chief economic advisor in 1995 and 1996, and the place was a mess. Why did he call me in? Because the place was a mess. They call the money doctor when things get bad. And they called me in, and
maybe I should call you in again, Steve.
Well, I am advising the opposition, but the opposition isn't in power, as you pointed out. Nothing has changed. You got the same old people in there, and the elites, by the way, people don't understand. The many of the rich elites support the current regime.
Which is hard to believe considering the poverty. 70% of Venezuelans are now poor. I mean, right, how can you support Maduro when that's happening? They have to be completely blind.
If you're an elite making a lot of money, you support them.
Right, but 70% of the people in poverty, there's no way they can support him. In fact, they voted against Maduro. The opposition won 70% of the popular vote. So they need to make a major change there, and I'm hoping that will happen.
Well, I hope they do too, and it has considerable potential. Let's put it that way. But the first thing you have to do is smash something that I measure every day, and that's the inflation rate in Venezuela. It's the world's highest at 742% per year. So, and the only way you can do that is to get rid of the central bank and the bolivar and dollarize the country.
I think dollarization makes sense since oil is their major export, and that's quoted in dollars. It makes perfect sense to adopt the currency board approach or just dollarize, as you said. Argentina, unfortunately, hasn't done that. They've not followed your advice in that respect, but they're making a lot of progress in Argentina. I'm optimistic there as well.
I think the Achilles heel of Argentina will be the peso. So I'm not holding my breath on Milei being successful. He hasn't done. It's hard to be successful when you win an election promising to deliver something and you never deliver it. He promised to dollarize, and there's no way. He's following the standard IMF format, which is usually ends in a river of tears.
It could be the case, Steve, but the Argentine stock market is at an all-time high. Milei has balanced the budget. He's done a lot of good things. And so I agree with you. He's got to stabilize the peso. Certainly inflation has come down to 2% per month, but that's still 24% a year. So it is a problem, but he's moving in the right direction.
Moving in the right direction. But my experience is, and if you have a fundamental, long-term, systemic currency problem, and you don't fix it, you're going to end up in the ditch. And that's why I said his Achilles heel. It's fine now, and of course everybody loves it. The hedge funds love it.
Well,
Trump.
foreign investments coming back to Argentina too, and that's really important. That's kind of your best indicator is what is foreign investment. They all left during the Peronista era, and Milei is encouraging a lot of foreign investment to come back into Argentina. That's another positive sign.
Well, the negative sign is my measurements of capital flight in Argentina. It's got one of the largest capital flight ratios in the world. About 70% of what comes in the front door goes out the back door in terms of capital flight. So a lot of that money ends up in Uruguay or New York or Zurich or London or someplace else. So this is why it's very difficult for Argentina to advance, because when I say 70%, it's 70% of the debt incurred by Argentina, which is of course the biggest deadbeat around, ends up in capital flight. So they have a huge capital flight problem.
Let's just move on.
One of the worst in the world.
Professor Hanke, Mark earlier talked about gold and silver as forms of investment potential. Let's just talk about your views on gold and silver and whether or not you concur.
Well, the secular bull markets are still in place. And your program in September 22nd, actually, when gold was about $3,700 an ounce, I said that I thought it would peak out at 6,000. It has gone up much more rapidly than I ever anticipated back in September when I talked to you. It is still going up. Just jump on the bandwagon and enjoy the ride. I think it's going to keep going up, and all of these mixed messages and concerns that Mark and I have said about Trump. Okay, Mark has emphasized a lot of the positive side. I've emphasized more of the negative side, but you end up with tremendous regime uncertainty with a guy like Trump, and now you internationally, geopolitically, everyone's pivoting away from Trump and the U.S. They don't like the threats, and so you have Prime Minister Mark Carney going to Beijing. Canada pivots away. The EU was just signed a huge agreement with India, which was a great. By the way, India should thank Trump for threatening all these tariffs, because one of the most protected countries in the world, one of the most screwed up countries in terms of trade policy, is India. And now what's happened? This pivoting of everyone towards China and India and away from the United States in terms of international trade has actually benefited India, because it's given Modi a rationale for getting rid of tariffs. Before, he couldn't do that politically. But now he can say, given all this stuff that Trump is doing and threats that Trump is making, we have to liberalize. We have to start trading with people. And that's just what they're doing. So I think it's a huge benefit for India.
Mark, do you think with...
and that's a positive view toward Trump in that regard, the silver lining, if you will. I do see the dollar is down 10% since Trump took office. I think that's one reason gold and silver have taken off. But I also think there is a difference now, because Bitcoin used to be this big competitor as an inflation hedge and seemed to be winning this battle. Gold was floundering, silver really wasn't going anywhere, but Bitcoin was going through the roof. Now we're seeing that Bitcoin is not the inflation hedge that they thought it was. And so where are speculators going? They're going into gold and silver. Plus, you have on top of that, especially for silver, the tremendous industrial uses of silver with the AI phenomenon and the data centers and the chip making all requires a lot of silver. Construction as well, the infrastructure building and stuff like that is great for copper. It's great for silver. It's great for uranium, the nuclear. There's a lot of great investment opportunities in this commodity sector. And I don't think we've seen the end of that.
So I completely agree with what Mark just said. I'm not even going to add anything to it. I completely agree.
Well, what do you think is going to happen to the?
And by the way, let me. This gets back to go. This gets back to gross output. All this commodity stuff. The reason I've always been interested since I was 10 years old. I've been trading commodities. That's because I grew up in Iowa, and Iowa, it's commodity country. Of course, soft commodities, not oil, but or copper or gold or anything like that, but corn and soybeans and oats and so forth. So the commodities are of interest to me because of that. Age 10, that's 73 years ago. I've been trading commodities for 73 years. Now we're moving.
You can't be that old, Steve.
What?
You can't be that old.
Yeah. Well, fortunately, Mark, I'm still alive and kicking. But at any rate, the key thing is the one reason I think that Mark and I are interested and always have been interested in commodities is this Austrian type of the structure of production and gross output. Everything going on in the supply chain. Well, how do you start to make a bolt? Well, you've got to go to a mine and mine something, and that has to be transformed into something else. And finally, you get a bolt or a screw or whatever it is that you're making. So all of those things are back and accounted for by gross output. You don't see that in GDP.
No, in fact, one of the things that's really interesting is the huge amount of silver in coins, and because it used to be, we used to have the silver standard, and people have bags of gold and silver, and they're sitting on it. You know, copper is not that kind of situation. Copper is used in industry 100%. Nobody is hoarding copper, but they are hoarding silver in huge amounts, bars, coins. 50 million of these were minted last year, and they aren't even minting them this year. By the way, 2026 American Eagle silver dollars are not being minted. Maybe they are in Canada, but the U.S. Mint has suspended the production of silver, and meanwhile, it's being it's kind of a disconnect. You know, it's like Paul Samuelson used to say about gold. Everybody's digging gold out of the ground, and then they put it back into the ground in Fort Knox, and that's happening to silver too. So I think silver has a potential of moving even higher.
I do too. By the way, my friends in Iowa, I still stay in contact with some of my old pals from Iowa, and they at least one of them is a big hoard of silver, and he actually sent me, Mark, photos. He's got silver dollars from the Olathe hoard. Have you ever heard of the Olathe hoard? It's one of the Olathe, Kansas. It's one of the biggest hoards, and that silver dollar, I can't remember now exactly. I think it's worth over $3,000.
What's going to happen to tech companies when silver goes even higher from above $100? Are they tech?
I think you're going to see a lot of melting of the bags of silver dollars, and people taking their silverware out and selling that as well, because there has to be more silver available for industrial use instead of being hoarded by gold bugs.
Yeah, so this is happening now. Now my friends in Iowa they get down where the rubber meets the road, and they deal with the coin dealers and so forth in Ames, Iowa, and Des Moines. And what's happened, they used to, if they took their silver in, they would, the coin dealer would buy it at a discount. Now they're buying it at a premium. And if one of my friends went down from Ames with a bag of silver to the usual dealer that he dealt with, he said they have a restriction that only two people can be in the shop at one time for security purposes. He said there was a queue, and there's never been a queue, never. He said there were 27 people waiting to get into that coin dealer. This
To
was
buy or to sell?
both.
Do you think if the tech companies sell off, like software companies sell off, that would curb demand for copper and silver?
Well, it's not whether the stocks will sell off or not, because that will happen from time to time. We're already seeing a fear that
Yeah.
that maybe these the demand for chip making and AI is overdone, like it was in the year 2000 with the dot-com boom. But it's there's a difference between the stock price and the actual demand for these commodities. I don't see any reduction in the demand for commodities in this data centers and the chip making. I mean, there are huge backlogs for orders in this area, so I don't see that happening. What I see is an increase in the supply available because the prices are so high.
Okay, let's close.
That's true, but the one thing, getting back to the economics of mining and recycling, you have to take into account with silver, the recycling, of course, is a big deal, but the elasticity of supply is pretty low. It doesn't just happen like turning a switch on a light. The price goes up and you just flip and you get more supply. It doesn't work it doesn't happen that fast. You do get more recycling of silver than gold.
Yeah. Well, I'm not talking, Steve. I'm not talking about mining, the actual mining of new silver. I'm talking about the huge amount of above supplies of silver. Those you're going to see a lot of melting down. I really think there's going to be an influx of supply from above ground supplies of silver. That's where I'm seeing.
Okay, well, I agree with that. It's happening. That's what the anecdote that I gave you about Ames, Iowa, and Des Moines. That's getting into that. That's the recycling thing going on.
Okay, let's end on one final question for both of you. Your outlook for the gold price for 2026 to cap off the discussion. I think Professor Hanke, I'll start with you. You mentioned this to me on my prior show. I don't know if you changed your outlook given the recent rally.
I'll just stick with my secular bull peaking out at 6,000. What I did tell you is that on September 22nd, when I did my arithmetic, my sharp pencil, the number I actually had on the piece of paper was 6,600. I thought, Jesus, that's really going way out there. I'm going to round down, not round up. I should have rounded up to 7,000. So let me adjust and say between 6,000 and 7,000.
All right, Mark, do you have?
In my case, actually a year ago, I put out a special alert, a marketing piece called 5,000 gold, or gold 5,000, I think was the prediction. And nobody believed me. I mean, it was really interesting. That marketing piece bombed, and nobody believed me. It's kind of like in 1981, I sent out a promotion. My very first promotion for my newsletter was the financial shock of 1981. You open up the envelope and it says, Reaganomics will work. Sell your gold and silver and buy stocks and bonds. It was a very good call, but the marketing bombed. And this is so typical. And I'm sure, Steve, the same thing when you said $6,000 gold. Nobody believed you, and now it's very real. So I'm over my prediction of 5,000. I have no idea how much higher it's going to go.
Yeah. Well, I think I'm kind of falling into that camp a bit, Mark. You get this nutty professor label when you get out with a prediction like that. All of a sudden, it comes back. Oh, what in the hell would this guy know? He's just a professor, and just blow the thing off, Now, there was some credibility because I wasn't that far over Goldman Sachs. So it wasn't. I wasn't on a different planet. Let's put it that way. I was just on the upside of the distribution. Which you at 5,000, you were way on the upside when you made that thing too. And so people.
I would just like to add that it's not just gold. I actually think uranium and nuclear stocks have a better upside potential because uranium prices are now at approaching $90 per pound, but they were as high as 120. So I actually think if for investors are concerned, they should look at uranium stocks as a more upside potential. We've already seen a tremendous move. I mean, hyperbolic for my Kinross Gold, for example, Avino Silver. There's a lot of these stocks out there. Newmont, all of these companies have just gone through the roof. And what's the better alternative? I think uranium has and copper as well. I think copper stocks like Southern Copper have a very good chance of making better money now at this point than your gold and silver plays.
Okay.
On the uranium side, I like MOX, MOX, because these SMSs, these small reactors that they're getting into, they burn a lot of MOX.
Excellent. Well, I thank you very much, gentlemen, to both of you for lending us your time. Where can we follow your work? Let's start with Mark first.
Well, I'm now at the Oxford Club, so people go to Skousenoxford.com. They actually can get a free copy of my newsletter at the Oxford Club, oxfordclub.com. So start on Monday, starting to write an investment newsletter and a weekly intelligence hotline called the Skousen Report.
Okay. And Professor Hanke?
You can follow me on X at Steve_Hanke.
Okay. We'll put the links down below, so please follow Mark and Steve down there. Thank you again, both of you, and we'll speak again soon. Take care for now.
Thank you. See you, Mark.
Thank you.
And thanks for watching. Don't forget to like and subscribe and follow Professor Hanke and Professor Skousen in the links down below. And make sure to use my code LIN, L-I-N, when you sign up to Kalshi, link down below, or scan the QR code here. New users will get $10 when you deposit $100.